Welcome to the Investor Financing Podcast, where we interview real estate investors and lenders so you can learn all the secrets to getting your projects funded and scale your portfolio. Learn about fix and flip loans, BRRRR financing, rental, fix to rent, commercial, multifamily bridge loans, business loans, and so much more. And now, your host, Beau Eckstein.
Hello and welcome to another episode of the Investor Financing Podcast, and I'm your host, Beau Eckstein. And today we're going to talk about multifamily occupancy levels required for an agency loan. So let's get started. If the property has 10 or more units, it needs to be at least 90% physically occupied by qualified occupants for the 90 days immediately before the commencement date. If the subject property is less than 10 units, there could be no more than one vacant unit as of the commitment date, and an average occupancy by qualified occupants of at least 90% for the 12-month period immediately before the commitment date. So you got to have, on anything 10 units or greater, an occupancy, a T3, a trailing 3-month P&L with 90% qualified occupancy at that time. So keep that in mind when you're looking at these deals, these smaller multifamily deals. Typically anywhere from $1 million to $6 million loan amount would be a small balance type agency loan. So you want to look at the occupancy level. You want to look at the trailing the T12 and the T3. You know, is it declining? What's going on in the last 3 months as opposed to the last 12 months? Look at that. And even if you're under it, let's say you're in the 80 percentile of occupancy levels, there's lots of options. There's bridge money out there. You might want to do a short-term bridge loan to come in, buy the property, raise rents, raise occupancy levels. That's a strategy. But also, what I've had a lot of success doing with my clients is working with the credit unions and banks. Their guidelines are a lot more liberal, and it's more relationship based, and that's what I like to do.
You're listening to the Investor Financing Podcast. We'll be right back after this break.
And now a word from our sponsors. Want to save money on your taxes? Cost segregation is a strategic tax planning concept that saves money by deferring federal and state taxes through accelerated depreciation. Get a free benefit analysis today. Please visit costseghub.com for more information on cost segregation and all of our cost recovery services that can put more cash flow in your pocket.
So the smaller deals, if it doesn't fit within the agency bucket, it's okay. There's a lot of other multifamily money out there. But I just want to give it kind of an overview of what the occupancy levels should look like on your properties. The other thing too, with agency debt, you need to qualify from a ownership standpoint. You have other similar type experience operating these type of multifamily properties. Do you have net worth greater than or equal to the loan amount with the sponsorship team? Do you have 10% in reserves, post-close liquidity? So if you fit those buckets, an agency sometimes is night and day, the optimum choice, but oftentimes we can get really good credit union financing or bank financing that's might even be a higher leverage because it might be in a secondary market, because depending if it's a primary or secondary market. So those are all the things we're analyzing when we're talking to you, but I want to give you these short bits of information as you're evaluating these deals, and you're kind of pre-underwriting these deals to see, well, what's the loan going to look like. The other advantage too on these small deals is a lot of times you're doing value add. So even if you could go agency, you might not want to lock into a prepayment penalty. We can go the credit union route oftentimes and not have any prepayment penalty. Thanks for watching another episode of the Investor Financing Podcast. I'm your host, Beau Eckstein. Please like, subscribe, and share with your colleagues, and I will see you on the next episode.
Thanks for listening to the Investor Financing Podcast. For show notes and useful resources, please visit investorfinancingpodcast.com. For questions or comments, email info@investorfinancingpodcast.com. If you enjoy our show, please share it with your network. Until next time.